Breaking news. With Outsurance, you always get something out. News Leader, proudly brought to you by Outsurance.
Welcome back. Now, a slowdown in infrastructure activity across Australia and New Zealand has weighed on Aveng's interim performance, and that's led to a decline in revenue. Despite that, Aveng is back in the black. Its reported headline earnings per share of 3 cents from a loss of 309 cents previously. Joining us now is Adrian Macartney, CFO at Aveng, for more on the numbers and the outlook ahead. Adrian, thank you so much for your time today. Let's start with the bottom line, the group back in the black. Walk me through some of the green shoots operationally.
Thank you, and thanks for having us. We're really pleased to see our performance in our infrastructure business, particularly in New Zealand and the Pacific units. They've delivered another year of great profits and sustainable profits at that. Second thing is in our vertical building business, built environs. We've had an outstanding performance there for the period, really closing off some great projects in New Zealand and some projects in Victoria and Australia. So superb profits there. That was tempered slightly by the Australian business unit, where we did see a return to profitability, although small, and that was after taking some provisions on a loss-making project up in Queensland. Our Southeast Asian business, disappointing result there, a little bit subscale, as we've taken some further hits as we close out, particularly the J108 project in Singapore.
Some of those headwinds weighing on the top line on that front. Walk me through that. We did see a slowdown in infrastructure activity. What's driving that? I think this was an issue in the last half-year period as well. And do you think that we'll see the tide turning anytime soon?
Yeah, I think it's particularly in our Australian business unit, we did see our revenues slim and fall. New Zealand has gone through a period where they've been really coming out of a recession, and so we've seen some improvement there in New Zealand. We're seeing some increased spend in the Pacific coming through development bank funded projects, and of course US defence starting to come into the Pacific. Australia, though, we have seen some slowdown, and we do see some projects slipping to the right as they seek to fund them, particularly in the clean energy space. We're also seeing a slowdown in the transport infrastructure space, notably in Victoria, but we are seeing some pickup in some green shoots in the areas around waste and wastewater, where we're particularly focused on. And of course, our ongoing work in areas around ports, coastal and marine, where one of our specialist activities. So I think what we're seeing is a shift in spend coming through, and of course, some things moving to the right.
A shift in spend. I'd like to get a sense of how you're managing costs then when it comes to some of those large-scale projects, particularly with the new risk management processes also in place, Adrian.
Sure, and it starts right at the very beginning when we look at potential projects and identify those, and making sure that we're making the correct go, no go decision or pursue, no pursue decision. Understanding our client, understanding the funding for the project, and understanding of course, our own abilities to execute that project. Understanding the risks associated with the project. We're making some clear decisions there around what do we pursue and what do we not pursue, because the pursuit and the tender costs in Australia are particularly high. And if we're going to spend $1 million pursuing a project, we want to make sure that we're going after the right project.
Okay. Strategically, there's been big shifts over at Aveng, the group retaining McConnell Dowell and the delayed sale of that mining business. How do these moves affect the broader restructuring of the business?
Well, I think at this point in time, our broad strategy remains the same. We have identified the need for two really quite different capital bases to support the two different businesses. In the South African context, we believe that in the longer term, the Moolmans business is best suited to have a strategic Black economic empowerment, empowered partner and capital into that business to be relevant in the South African economy. And we would like to pursue that transaction. Sadly, we were unable to do so because of some of the uncertainties associated with the Chippy contract. Similarly, in Australia, we believe that an Australian investor is best suited to price and reward us for the value of McConnell Dowell. Now, we've been unable to do that because of some uncertainties associated with some difficult contracts that we've had. And so we're focused very much on cleaning those up and delivering a sustainable profitability across the future so that we can move towards seeking a new capital base for McConnell Dowell.
Okay, so you're still looking at partnerships when it comes to those businesses?
Absolutely, but it's going to take a little bit of time. We need to stabilize the businesses and demonstrate to the market sustained and sustainable profitability.
Given all this, leadership stability is key, Adrian, and I'd like to get a sense of where the company stands on appointing a new CEO, a permanent CEO, that is.
Right, so we've taken a decision and, and we had a misalignment really. Our outgoing chief executive was not really capable of or wanting to commit at his stage of life to a longer term period of potentially 3 to 5 years. And so we took a decision that Scott would then retire from the business and we would seek a new chief executive officer. The search for the chief executive is underway. Our board obviously has an independent subcommittee and they're looking through that process, and that process will run over the course of the coming months.
All right, let's leave it there. Adrian, thank you so much for your time and taking us through the 6 months that was for Aveng. That was Adrian Macartney, CFO at Aveng.
Breaking news. Switch to Outsurance Business Insurance and get a 20% discount. News Leader, proudly brought to you by Outsurance.